guys, welcome back to another video. Today we're going to take a look at the NASDAQ 100 from a technical, fundamental, order flow and sentiment perspective as well. And if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Now, we're going to start with the technical data first, then we're going to look at some sentiment data, then order flow data, and then fundamental data as well. Now, for those of you that has been on the channel for quite some time or from the start of the year, you'll know that I've spoken about the NASDAQ 100 in the past. And here's a quick look at this video I published on the 3rd of January, and I said that there was a big stock market crash coming. You can see when I did this analysis, the market was trading at 16,427 and the market is now currently trading at 13,637. So that price was sitting around this level over here. When I explained for all of the reasons why I could see that massive sell-off coming, now it's time for an update, and I've got enough data over here, so grab a cup of coffee or a snack and enjoy the video. So starting on the technical analysis side, what do we have? Firstly, from a monthly time frame, what do we see? We can see firstly how the Nasdaq printed this level of support, broken below support, and it is now being turned resistance. But we can also see how the Nasdaq 100 is also testing a previous level of support that got broken. It got tested as resistance once, and the market is back to test that level again, giving us an indication from a price action perspective that we can definitely expect some short-term bullish momentum before the continuation to the downside. Now, on the weekly time frame, what do we have? Now, from a weekly perspective, firstly, we can see how the Nasdaq 100 excuse me, had printed this level of support. But before we get there, firstly, we can also firstly see how the Nasdaq printed this information, came back to test that level over there, then started the continuation, printed new structure, broke below that. So we can definitely expect the Nasdaq in the short term to continue to the upside before the continuation to the downside there as well. We're going to get into the reasons for why we can see the market continue to the downside. Now, from a daily perspective, what do we have? Now, the last time I spoke about the Nasdaq on Instagram, the market was sitting at this level, and I explained all of the reasons for why we can expect the market to pull back. Then I said we can also be looking for selling opportunities. And if you do want to check out the video, it is on my Instagram channel, our Instagram page or whatever they call it as well. Now, what do we currently have over here? The Nasdaq 100 just printed a massive impulse. After an impulse, you obviously expect a correction to at least a 0.382 before the continuation starts. Now, firstly, if you take your Fibonacci there from the low to the high, you can see how the 0.50, which is a 50% pullback that we can expect in the market before the continuation. But if there's one thing that we need to keep in mind as well, is that the market is also trading below the strong level of support. Now, there's two ways in which we can approach the situation. Firstly, once the market pull back to that level, we can then monitor price action from that perspective before the continuation to the downside. Alternatively, we can see the Nasdaq potentially retrace deeper before we expect the continuation to the downside as well. So as traders, we have to be reactive and not predictive, and we have to learn to adapt to the ever-changing market environment as well. Now, the next thing we're going to do is we're going to look at the order flow data, so the commitment of traders, and this tells us what the big banks, hedge funds and institutions are doing in the market. Now we can see, based off last week's report, hedge funds came in, they added 978 longs, and they also closed 392 short positions, and we can see how the overall net positions had increased from 7.9k, now sitting at 9.3k, and we obviously saw some bullish momentum in last week as well. So we got that correction within last week. With this week's report, we should see some, we should see hedge funds starting to add some selling positions as well. Now, the sentiment data for the Nasdaq 100 is not available, so we are going to look at the sentiment data for the S&P 500, because this also gives us an indication in terms of what's happening with retail traders. Now, this report tells us exactly what retail traders are doing in the market. Now, we can see, based off the latest report, we've got over 50%, almost 50% of retail traders that are buying, and we also got about 50.74% of retail traders selling. Now, I always say that you want to be on the opposite side of what retail traders are doing. Now, because we got so many retail traders selling, you can definitely expect the pullback on the NASDAQ 100 before the continuation, because market makers always trade against retail traders in order to grab that liquidity to move to the downside. Now, if you think about the NASDAQ in general, so NASDAQ is a composite that's made up of 100 electronic companies in the US, mainly Apple, Amazon, Google, Tesla, as well as Facebook. Now, if we go and look at what the CPI data tells us, now the CPI tells us what the consumer, it's called the consumer's, yeah, well, it's the consumer price index, which gives us an indication in terms of how consumers are spending. Consumer spendings over a long time, and we can see here that the consumer spendings had increased a lot from 263 all the way to 281.93. We can also see how the latest inflation reports telling us that inflation in the US is currently sitting at 7.5%. However, we know that's not the real number because we know inflation is higher. Now, the only reason why consumers were spending so much money was purely because of low interest rates. So they were encouraged to go out there and make debt in order to take advantage of the low interest rate. But if there's one thing that we need to understand, when inflation is at an all-time high, because the US inflation is sitting at the highest than what it's been, I think in 1980 in August, somewhere there. So it's never been as high as 7.5% since then. So inflation is quite high. But also, if you look at the Federal Reserve, this is the funds rate, the Federal Reserve interest rate chart. Basically, it tells us what the interest rate were like. So if you go and look over here, you'll see that the interest rate was kept steady from 2020 up until 2022 at a 0.25% basis point. Now, if you look at how low the interest rates were since 2020, and you look at the consumer price index for since 2021, it's very clear to understand why consumers were spending so much money, purely because interest rates were quite low, meaning that you could buy a product and the interest that you do spend on that is quite low. But the situation that we are sitting with now is that the Federal Reserve is going to increase interest rates, and when interest rates increase, consumer spendings tend to drop, because the money that people had left over to spend on goods such as Amazon, Google, Tesla, and companies like that, tend to drop, because now that extra money that they have had to spend need to go into that bond payment or that car payment, because the interest that they are going to pay on that will be higher compared to what it was when they initially had made all of this debt. And coming year, you can see the US national debt is sitting at 30 trillion. The debt per citizen is sitting at 90,607 as well. So they are, so basically, uh, uh, um, Joe Biden as well as Jerome Powell, they've created this platform, since the pandemic started in 2020, where they dropped interest rates so that they can encourage people to make debt at such low interest rate. But now we saw the consumer price index had increased because of low interest rates. But we both know that going into next month, the Federal Reserve is going to hike the interest rates with at least a 0.25 basis points or a 0.50 basis, depending on the severity in terms of how high inflation is going to be. So the CPI data for next month is going to be a key indicator to how high we can expect the Federal Reserve to hike the interest rates as well. Now, if you're sitting there thinking, okay, but we understand that, if people spend less money, it's going to hurt companies such as Apple, because people won't be spending. A lot of the tech companies in the NASDAQ 100, like the big companies in the NASDAQ 100, which holds the highest percentage in there, which is Amazon, Apple, Google, Tesla. All of these companies, their growth relies on consumer spending. So if people are not buying anything, they're not making any money, and as a result of that, investors are not interested in investing in a company that's not making any money. So we can expect the Q1 earnings for this year for these companies to be quite low as well. So now you're sitting there thinking, okay, but what about Facebook? Like, people are not buying Facebook because Facebook is free. Now, that is an interesting question as well. So we can see Facebook stocks plummets at 26% in its biggest one-day drop. Now, the main reason why the shares of the company had dropped is because Apple, they blamed Apple's privacy policy in Apple's iOS. So what that means, if you've got an iPhone, you probably know um, that if you do download an app, the iPhone normally asks you, do you want to, do you want to allow this app to track you? And you say no. Now, Facebook, Mark Zuckerberg was asked in a court case that it was in a long time ago. You said that Facebook is free, and his answer was yes, Senator. And then they asked him, okay, but how are you making money? And his answer was that, well, we make money through running ads, and the accuracy of ads on Facebook is dependent on people's behavior. So people on Facebook, you as the person that are using it, you are the product that they are selling to the consumer out there or to bigger businesses out there, depending on what you search for, what you look for. But because they are unable to track that, as a result of that, they're unable to give accurate information to people that wants to run ads on their platform. And as a result of that, people are going, well, if you can't give us accurate information and ties directly with the people that we are looking for, then this is not something that might want to do. We could consider, running Google ads or anything other than this as well. But if you think that this was a problem, so think about it in this way. Okay, Facebook plummets 26% just because Apple iOS changed their privacy. Well, guess what? Next thing we know, um, Google comes out, and Google is saying, based on this article from the street, it says Google to purge its privacy settings from Facebook, others as well. So what this means is that Google's new privacy restrictions will limit sharing of user data with third parties also. Now, before you go, okay, but what does this mean? In simple terms, it basically means that Google is now following the same path that Apple did in regards to how your data is being shared on Facebook, and Facebook fell 26% just because of Apple implementing that. Now, if you look at this article over here, okay, and this gives us the key stats in terms of how many users in terms of each category is there prospectively. And you can see over 70% of all mobile devices worldwide were running on Android as of July 2021. It could be even more. So let's say the 30% is running off Apple devices. So if 30% could send Facebook down to 26% dump, what do you think 70% is going to do once Google introduces that um, you once Google start introducing this new law? And this was published on the 17th, but I'm not sure if it is implemented because I don't use an Android device. But if you are using an Android device, I'll be happy to know if that update has been rolled out as well. Now, this is going to hurt Facebook even more, so we can expect Facebook earnings to be quite low this week. Sorry, for the Q1 earnings as well. And because Facebook's one of the companies that holds a high percentage in terms of the NASDAQ, in situations like this, the NASDAQ will take that punt. So now you understand how Facebook, being an ad-driven company, will also be losing out on this as well. The share price is going to drop, and as a result of that, the NASDAQ's going to take a knock. As of the other big guys in there, they their Q1 earnings is also going to be bad, purely based off the fact that the Feds are going to hike interest rates. Then when that interest rate starts to hike, that interest rates is then passed from the lender all the way to the borrower also. So it gets dropped from the lender to the borrower, and then that means consumers will be put in a position where they're unable to actually go out there and spend money. And because these companies run off these, the company grows off people spending, how much money people are spending in terms of buying goods and services. And if people are not out there buying anything, you can expect the stock market to continue to crash. Also, we've got prices of the US oil rising. It's almost sitting at $100 per barrel, which is also going to hurt consumers in the US, because that means they'll be spending more money at the gas station as well. So there's going to be no point for them to even go out there and start looking for ways to spend money on anything other than the fact that they need to clear their debt, finish their loans, things like that. And as a result of that, all of these stock companies are going to, like, investors, they already see that, and that's why the NASDAQ or stocks in general tend to drop when interest rates are hiked, because investors know that once interest rates are high, it's not going to encourage or motivate people to go out there and spend, but they would need to take that extra money and pay their bond or their car or whatever it is that has got an interest rate attached to it as well. Now, that is a full breakdown on the NASDAQ 100. Also, for you guys, if you enjoyed the video, please smash the like button for the YouTube algorithm. And as always, I want to thank you for your time and for your efforts. And as always, cheers for ears. Thank you.